Is there a better process of managing risk in day trading?
Yes, and it starts with thinking in percentages. Okay, and the reason again that matters so much is if you sit down with your trading computer closed and a pad of paper and a calculator, if people still use those, and you say, what is not going to make me vomit? Like, what loss is not going to make me vomit? I have a $10,000 trading account. If I lose 25% of that, that's $10,000 goes to $7,500. Am I going to jump off of a cliff? Okay. And if the answer is yes, that's too much risk. Okay. So you start with the bulk. Then you say, what is the amount of money I'm willing to lose out of the capital I have allocated, the total capital? You don't have to put it all into your account. Okay. You don't. But you have to have a mental picture of what the number is. I'm putting 10,000 in my trading account. I'm going to put a total of 50 in. Now that doesn't mean, this is another key point. Some people will put 10 in, right? They'll triple it because they're active, right? And the market goes their way. And they take 20 out and they remain with 10. I got no problem with that at all. It's not what I would do, but I have no problem with that. Then they lose that 10 and they put another 10 in. Then they lose 20 and they put that remaining 20 in. Then they lose 20 more and they put 20 more in. That profit you made has now made your total risk 70. Now you might think that the 20 that you made is house money. And in reality it is. But if you said I'm only going to risk my original 50, you have to have a plan for that 50 all the way through gains and losses. So one of the things that I did when I first restarted my trading career after I've told you guys in other shows that I lost close to six figures in less than 9 months, right? I then said, I'm going to start with another $30,000 that I had gotten together. And I said, I am going to take profits out until I have that 30 back. And then once I have that, this is my trading capital for the rest of my life. Now, my active trading capital, okay? That's a very key point. So I'd make more, I'd take some out, I'd lose, I'd leave it alone until I made it back. It was a whole process that I had pre-planned out, recognizing the mistakes of my six-figure debacle in inside of 9 months. So that's really the key to it, is sitting down and saying, so the best way for risk management is once you get that total number you're willing to risk, then you know that's the number you can lose, not the 50,000 you put aside. If you say I'm putting 50,000 aside and I'm willing to lose 50% of that, your risk is 25,000. It's not 50. Okay? And there's nothing wrong with that. And then you break it down per trades. I have been demo trading my strategy for 2 years now, and I average about 2 trades a week or 2 trades a day or whatever it is. Say, okay, there's 20 trading days approximately in every month. How does that break down? 2 trades a day, 20 a day, or 20 a month, 20 trading days a month. That's 40 trades a month. How many is that per year? And how close does my win-loss ratio and my winning and losing percentage get me to that $25,000? And you backdoor that all into percentages, okay? All into percentages. And then from there, you never look at dollar amounts again. You operate on percentages and you compound.